All right, good afternoon, ladies and gentlemen. Welcome to the afternoon session of the 80th IREPAS Traders Committee meeting. As you probably know by now, what we do is ask in advance for you to send us your questions ahead of time, and we take them as our base for our discussions. By no means our discussions are limited to those questions. For that reason, I strongly encourage all of you to ask or have comments on any of the subjects that you want us to discuss here. So maybe I should start. If you have any questions that you want us to discuss now, to begin with, I'd like to do that. If not, we can start with the questions already we have received. Is there any questions that you want to ask first? I kind of didn't think so, but anyway. The questions started with the trade cases. And the first one is, what is your expectation about the USMCA, I think they mean US-Mexican-Canada agreement, given the existing tariffs under Section 232? Trump granted permission for the Keystone pipeline recently. How do you think this will play out regarding for the USMCA? Do you think this is a concession for the US's part? Yes, of course, it's a concession, but it's something that had to be a must, because the pipe that goes into the pipeline actually were already been produced a long time ago. It's been waiting for the installation. Imagine the subject is coming from all the way from Obama administration. So I don't think it was possible for this administration to go ahead and, put a tax on something that's already been produced for a specific project with a specific budget. So yes, that was a, concession, but it's by no means that there's more concessions coming for Canada or Mexico, or any really easing up on the concessions that's given by the U.S. government. Comments? The second question is, do you expect the U.S. and China to reach an agreement in the near future on a trade deal that will put an end to tensions between the two sides? What will be the main knock-on benefits for the steel trade? I can say that there are surely a lot of benefits for both sides, okay? But I think just like the North Korean deal, I don't expect a happy ending that fast. I believe the Chinese will not bow to the U.S. demands that are not easy to swallow. And also, as you have heard from the professor this morning, the Chinese have good funds to really keep the negotiations forever. And U.S. is probably more in need for an agreement. So I don't think the Chinese will give in to U.S. demands that fast. So all these things that I read, even today, that is imminent coming, I doubt it personally. But maybe I can ask you what you think about it.
I mean, when we look at the Chinese export to U.S., especially for electrical application and electrical devices, is occupying about 26% of total Chinese export to U.S. And also machinery, which is occupying about 17% of total Chinese export to U.S. So since those exports start to come down, so we clearly see that hot roll plates and hot roll coil prices start to have a big pressure. And another thing is, we clearly see in China is automobile sector is softening as well. So which is giving also big pressure on the hot roll coils. Especially for the hot roll coils production, new capacity came up about 2-3 years ago. So that mill started to have a big pressure. Pressure on the selling, pressure on the prices. So we clearly see also as a reflection for the flat product, mainly from China to US.
There's definitely a reason for both sides to come to the table and do something about it. But I think the demands coming from the US side is extraordinary for the Chinese to accept upfront. So yes, they may eventually come to an agreement, but I don't think it's going to be that fast. Knowing Chinese, they like to negotiate forever. So I don't think it's going to be that fast of a concession. And I mean, obviously, if you read, the Wall Street Journal or any other publication nowadays, it says it's imminent, and the Wall Street thinks that it's imminent. I, for one, don't think so.
Yeah, and I think what we also have to bear in mind, even though there is eventually a quick trade deal to be done, the anti-dumping issues, they will remain in place. So there is certainly no doubt that any anti-dumping surcharge, which is already on Chinese products, will be removed by such a trade deal. This will go on, and correct me if I'm wrong, but I'm pretty sure this will have no impact at all on those products which are bearing an anti-dumping.
I mean, if you think about it, the steel terms, there was not a whole lot of trade between China and the US to begin with. I mean, really what's going on right now is the negotiations on cars, electric cars, and basically agricultural products. Those are the items that they're talking about. Steel, I think China already gave up, and like Alf said, I don't think it's gonna, make a whole lot of impact coming from the U.S. side, because there was not really any trade, and very, very, very small trade. So even if they agree tomorrow, from the steel trading point of view, it's not going to make any difference. So I agree with you for sure, definitely. Okay, do you have any comments, by the way, on this subject? Okay. Well, the next group of questions are on raw materials. And the first one is, how do you see the outlook of iron and ore prices given the expected supply deficit? I'll give my 2 cents on it. Obviously, the latest increases in prices that you see in iron ore is originally should have been the Brazilian dam a failure, but then that didn't affect the prices immediately. It was a smaller gap. And then last week they said, well, there's a weather interruption in Australia, and then the price started going up to $90 to $100. Does that make sense? Is it sustainable? I don't think so. But I'd like to ask my friends and have probably better opinion on this.
As you know, we started to have a problem with the Vale supply of the iron ore. And that time, China was on the holiday, Chinese New Year holiday. And that time, of course, we didn't see any reflection from Chinese side. But the iron ore prices starting, because we have clearly seen that the scrap prices increase in Turkey from $280 up to $330, $35. Then after China came back from holiday, also we start to see that the iron ore prices is increasing. And the same issue that we've been seeing clearly also in Middle East as well, because the Vale allocation to the integrated mill also in Middle East also start to come down. So what we see is the supplier, the producers, they start to focus more on the local scrap, and which also push the scrap prices as well, also in Middle East and locally. So selling price also, of course, since the costs start to increase also, we have seen that the selling prices also start to increase. So definitely there is a big impact, and also we start to see the level of $93, $94 right now, the current iron ore prices in China. Today the price is stable for the China with the price of $93.5.
One thing I'm going to mention is, yesterday we had discussions on it. Even if the price goes to 100, the net effect on our steel coming from the electric arc furnaces is not going to be much affected because the gap is still there. So iron ore prices are still, well, I should say blast furnaces are still in a positive against the electric arc furnaces, even at $90. So just because you see the prices going up on the iron ore does not necessarily mean that the prices of steel is going to go up. Any other comments? All right, next question is on the electrodes, although this was discussed this morning. How do you evaluate the latest situation as regards to graphite electrode shortage? Well, we heard this morning that there's no shortage. It's just that the prices went up a little bit. Not a little bit, actually. It went up 5 times. I understand that they were selling it for, in the past, about $2,000 plus or minus. And now, this morning, they were telling us that the prices are between $5,000 to $10,000, and $10,000 is the graphite for very large diameter and specifically coming from specific countries. So really the shortage or the crisis that we had last year basically dissipated. Just the price went up, and what people say is that those prices will be there for a long time.
Yeah. Talking to the producers, mainly Turkish producers, they confirm that still the supply situation for the electrodes is tough. There is it's almost an oligopoly of producers, one in Japan, one in America, and some smaller here and there. But those special electrodes of a special size can only be sourced literally from 2 different suppliers. And so since they have this market really in their hands, according to the customers, meaning the rebar mills and other steel producers, there is hardly any chance to negotiate with them. And so, okay, the price came down from 25,000, what we had 1 year or 2 years ago, even heard. It's now, however, pretty firm on 10,000. Others are talking $15,000. But the clear opinion is that this level is going to stay for quite a time, and we should consider those numbers as an impact for the prices.
I don't know if you were really paying attention to the graphs this morning. They were showing that obviously the price of the electrode is directly related to the graphite, and this morning they were showing on the graph that part of the graphite usage is batteries, and the consumption of the graphite for the battery usage has been increasing year on year. So there is a probably futuristic, problem or shortage coming from the on the graphites due to the battery increase, and the battery increase is a main thing because of the electric cars and the solar power that they use the graphites for. So, I'm not too optimistic that this prices may stay forever, but although realistically they already went up 5-fold, so I don't know how much more they can go, but there is some room, futuristically, not this year, but maybe 5 years, 10 years from now, that you may not see these prices, and it may go up more. The next question is billets versus scrap for electric arc furnace, and the electric arc furnace versus the blast furnace in terms of the production cost. Who do you like for the next 6 months? I guess, would you prefer? or which one you think is more economical in the next 6 months? Maybe you can comment.
Yeah, we have spoken about this already internally, and as you correctly stated, although iron ore is now at $90 and eventually may go up another $10, still the ratio between iron ore price to the scrap price, there is such a big gap that still we believe to be a blast furnace producer today would be the better option. But again, this is as of today, and Hussein, maybe you can give also your comment in regard of coming from China.
Especially. I mean, thing is, especially for the since U.S. market and the attractive due to the 25%, 50% the import tax. So especially what we see is the scrap supply of US, they've been preferring to sell to locally. So since we see that time the increase of the scrap, but mainly most of the time we also see that the blast furnace, the cost of the blast furnace is more attractive than electric arc furnace. And but recently we have already seen the level of $100. But still, the blast furnace is having the advantage. It is what we see, at least in their selling prices strategies.
I mean, we had discussions in the last few IREPAS about whether certain investments should go into blast furnace because it's obviously more economical now. And there was also some discussions, you know, like actually maybe the Turks should invest money, and so company is looking forward to invest money in the blast furnace. Reality is yes, it may be favorable for an existing mill, but it's a very capital-intensive industry. So comparing to the electric arc furnace, the other one is so much capital required to really build one. You will see in the future that there will be more electric arc furnaces instead of the blast furnaces. And one last thing I want to say, in China, if you look at what's going on, this morning they were mentioning that there's 250 million tons of steel will be produced by electric arc furnace. Mind you, it was a lot less before, and so they used to have induction furnaces which they took out, the majority of them took out, which was like another, according to them, 120 million tons. So there's a serious push for the electric arc furnace in China, and one good reason is China is a scrap producer now. So China pretty soon may be self-sufficient for their own scrap. So there's, if you want to know who do you like, I guess the Chinese like electric arc furnace, and I'm no one to say anything about it. All right, well, now that we're talking about China, by the way, any comments on these? I'm going to start calling you one by one, so get your opinion on it. Anyway, on China, next major questions are on China. Summarize of the market dynamics trends in 2019 in China, Southeast Asia, and expectations for 2019, I guess this year. You can probably talk.
Okay. The current positive factors right now in China, still inventories are getting less than what we expected. So it's getting faster than what we expected. And also since the government environment policy is getting serious as well. As we know, the government policy was cutting down the production by 150 million tons within 5 years' time. And so far, in 2017, 65 million tons is cut down, and 2018, another 55 million tons cut down. So within 2 years, 120 million tons already cut down out of 150 million tons. So in 2018, the last quarter of 2018, infrastructure investment increased by 3.7% in China. And also the approved real estate projects also increased 14.3% in last quarter of 2018. So normally construction starts after the approving the project about 3 to 6 months later. So what we expect within 2 to 4 months, 2 to 6 months, we are expecting the new demand to come up in local market in China. And I would like to also share with you some figures about the China regarding 2018 and 2017 and 2018. Steel consumption was 800 million ton, and in 2018 was the steel consumption 820 million ton in local market. And the crude steel production was in 2017 900 million ton, and 2018 was 923 million ton. Then export, we clearly see that the export quantity is coming down. In 2016, it was over 100 million ton, 106 million ton. In 2017, we have seen 55 to 60 million ton, and the 2018 was 45 to 50 million ton. So the reason that the export quantity is getting less year by year is not that the producer is cutting down the production. Mainly that the quantity which is not exported is goes to the local market. So local market demand is quite sufficient in China. And also...
so excuse me, are you suggesting that if the local market is sufficient, they're not going to export as much?
Exactly. We are not expecting China to be aggressive in 2019. Our reference is always selling the billets or exporting the billets from China. We always take it as a reference, so we don't expect China to export billets in 2019.
How about finished products?
Finished product is going to also come down as well. I mean, I can give you the finished product, also the figures. Like 2017, bar and rods, the long product was exported in 2017, 16.2 million ton. In 2018, it came down 12.8 million ton. And also section, flat, pipe also came down compared to 2017. So the total export most probably is going to be less than 45 million ton this year as well. And regarding Southeast Asia, demand in 2019 slightly is better compared to 2018 in Southeast Asia. But one of the threats that we've been seeing is the new capacities coming up, such as Vietnam is 7 million ton, already came up. New production, Formasa, the mill name. Malaysia is already came out 3.5 million ton. The producer, Alien Steel. Indonesia, 3.5 million ton, Dexian Steel. And there is also capacity that which is approved, but the production is not started yet. And Malaysia, another mill, new one, 5 million ton. And the Philippines, 8 million ton. Hengang mill, which we are expecting within 3 to 5 years, which is going to be operated. And also another mill in Philippines called Panghua, 10 million ton, and we are expecting within 6 to 7 years. So, especially in Southeast Asia, the way of trading looks like it's going to change. What I mean is, especially for the long product, the Southeast Asia trade is going to Middle East, then to Turkey. And it looks like it's going to stuck in Southeast Asia because even the new mills start to export to Southeast Asia already. So there is a huge competition in that area.
Excuse me. So are you suggesting the material produced in the Southeast Asia will have an export market and they're going to go to the Middle East instead of the Turks? Or fight with the Turks?
That's right. It looks like it's going to replace the export of Middle East, and it's going to replace the export of Turkey to Southeast Asia. And I would like to also give you some price idea right now in China, just for the reference. Today, the billet price is $495, $500, and today is increased by $8 compared to Friday. Rebar price is $520, $25. Today, increased by $10. Wire price is $550, $55, and increased today $5. Hot roll coil price is $535, $540 FOB. Hot roll place $555, $60. Cold roll $580, $85, and today also increased by $5. And the profile sections, angles $510, $515 also increased by $5 today. So the picture is quite stable in China, and in short term we are not expecting China to be aggressive in Southeast Asia and our region,
well,
Middle East, Turkey.
Hussein, you said two things. One is China consumed 800 million tons in 2017 and produced 900 million tons in 2017. Next year, in 2018, China consumed 820 million tons, but produced 923 million tons. So there is 100 million tons every year of additional capacity, additional production that didn't go anywhere, but must have gone to export. Otherwise, they'd be sinking with steel. What do you think?
I mean, this is one of the subjects that we talked yesterday.
I still have the question. I'm not satisfied.
So the thing is, yes, according to figure that the Chinese export should be 100 million ton rather than 50, 55 million ton. So we figured out yesterday that it should be the stock material that which is not exported.
50 million every year? I don't think so.
I mean, the thing is, the figure...
it's not a big number.
I mean, so this is the official figures that we have, that which is not actually...
I think that explains it, official figures. Okay.
Official figures.
All right. Well, we'll take that, official figures. Thank you.
Yeah.
It didn't make sense.
I was expecting this question anyway.
All right. Second question is on iron ore, I guess the value effect on the Chinese market. You kind of explained that, but maybe you can add a few more sentences on it.
I mean, Vale still made some declaration that in the second quarter, their export quantity is going to come down. So we will definitely see that the affection on our steel business. First of all, at least scrap supplier will have something in their hand to use it in the negotiation with the mill. So, and the iron ore prices, since the iron ore price is increasing, so at least whoever the producer of the blast furnace, so they will keep the prices stable or up. And which is going to also affect also the other raw material prices, starting with the scrap and billets. So, so iron ore is going to be the major factor right now, that which is going to put our prices firm.
Thank you. Actually, the next question was on the export figures, which you already have discussed. I'll go to the next question, which I think is very interesting. The removal of the VAT, 3%, you talk about the Chinese removal of reducing the VAT by 3%, and from what I understand, it was also reduced by another percent before. So how will that affect, and how serious it is, and what's the effects of it? Again, you can talk about it.
Sure. In 2018, May, the VAT in China was 17%. So in 2008 May, it came down 1% and became 17% VAT. And this year, it came down another 3%, not only for our steel business, for all the producers, VAT came down. So if you take a reference of $100, so the prices used to be, for this 3% VAT reduction, the prices used to be $116. Now, by reducing the 3% VAT, became $113. So between 116 and 113, there is a difference of 2.61%. So it should be the export price. It should be cheaper, which is 2.61%, but which we don't see it in our steel business yet. Usually, the sector that is given the first reaction was the mobile business, electronic business, which is the more the price sensitive product, which we haven't seen it in our steel business yet. So same as in 2018 when we make it, when the VAT came down 1%, we didn't see any price differences.
Was there VAT for the exports as well?
Okay, the thing is, as you know, if you take a reference of rebar, if you want to export the rebar from China, first of all, you pay for 16%. You used to pay for 16% tax. And the rebate, when you export it, you used to get it back 13%. So meaning of it, your cost as a trader is 3%. You give it to 60% to the government and the 13% rebate from the government, 3% the cost. Now it became equal. So whatever you pay, which is 13% to the government, you get it from the government as a 13%. So it's equalized. So as we all know, once the VAT came down, always we see some demand in the local market because local market price is also coming down as well. So that was one of the reasons the government, in order to support the local market, they reduced the VAT.
So this clearly says that there is a 3% advantage for the Chinese exporters today comparing to, let's say, last year.
That's right.
Yeah, and I also noticed that this morning on the presentation from the Chinese gentleman, China is really trying very hard to stimulate the economy, and with the VAT decreases, with we just mentioned the permits for the housing, so I think that you may see more growth in China, which hopefully will consume more of the steel produced in China, since they're not adding theoretically any more capacity to it. So they may consume more than they were before because of the economy being, more actually moving up and the GDP moving up. Do you agree on that?
I fully agree with you, especially for a long time. We see that the Chinese government always to give the finance to the local market, to keep the local market is running. And because we're talking about the country almost is consuming about 800 million ton a year in local market. So what we always say that the China is, meaning of China in steel business is local market. So if the local market gets frozen, then the problem starts for the export, for all of us. Then, so this is what the strategy, and the government, when the government decides, they follow the strategy.
We will support the local market. The next question is, as a trading company in China, I guess he's talking about him, what are the concerns and how to seek the steel export opportunity under the current anti-dumping and limited quota situation in Europe, whether we should focus on the same semi-products? I guess you can make more sense to this question.
Well, we are not really a trading company in China, but we are a trading company in Lugano, which is still Switzerland. But our main shareholders are from China.
I know.
So, I think Hussein has already given the numbers. The export volume from China is not as big as everyone may believe. So 45, 50 million tons is a big number, but it's also relatively small compared to the rest of the world. And saying that, we also identified already that in the majority of the countries in the world over the last 10 years, China was hit regularly. Every year they got anti-dumpings here, there, whether it was in America, whether it was in Europe on wire rod. This is already existing for 5 or 6 years. Will probably, or was just extended, so will probably run another 5 years. So I think those who are really focusing on exports from China, they have their niche products, they have their products to countries and to areas and for customers who really desire the material. And what we also identified yesterday, the Chinese, of course, are also intelligent. If there is room for doing and to change the strategy, they will do that. So if wire rod is being dumped, okay, then they will sell barbed wire. Yeah? So they will go in the next process. And until that one is being hit by anti-dumping. But yeah, well, I think China is really not depending.
Is there a safeguard quota for the Chinese steel into Europe?
There is a safeguard quota, yes, for various products. It's each product has a different quota.
Specific to China, like Turkey?
Yeah, specific for China. Again, for certain products. So if a product, for example, is dumped, you don't get a quota, because then you have not supplied anything over the last years, probably, unless you can afford to pay even the anti-dumping surcharge on top and still having a good price, which is not possible in these days. And so for all the other products, yeah, there is a quota for specific products for China, specific products for Turkey, and like for Rebars in that case, there is a country quota for Turkey. There is a country quota for Bosnia-Herzegovina.
But is there a country quota for China as well?
No, no, because
it's already out.
It's out.
Yeah. Okay. By the way, any comments on these? All right. Yes, sir.
Hi, good afternoon. Adam Smith, Callanish. I just have 2 questions for you, gentlemen. Coming back to the effect of higher iron ore prices on scrap, I hear some scrap suppliers justifying not accepting lower bids with the argument that after the Vale dam disaster, there's been upward pressure on supply of, or there's a shortage of direct reduced iron grade iron ore pellet feed supply. And this has resulted in some Middle Eastern steel mills increasing their scrap procurement, which is putting pressure on scrap supply and prices. Is this the reality in your view from what you're seeing, or is this just an argument that the scrap suppliers are using to get more money for their deals?
Honestly, I did not get the question.
Some people are saying there's a shortage in DR grade iron ore pellet feed.
Well, that I cannot comment.
Which the mills in the Middle East, which are DRI based and usually use DRI to produce steel, as a result, they are now procuring more scrap because of this DR pellet shortage.
From where?
Well, from wherever they can get it.
You're talking about scrap. No, I thought slab. Okay.
Mm-hmm.
Yeah.
Scrap, yeah.
I mean, what we see is when we talk to the scrap supplier, they, for example, if you take a reference of Middle East, they've been telling that they've been receiving the sufficient demand for the scrap from the Middle East compared to 5 to 6 months ago. So here, yes, the quantity, the consumption of the scrap in the blast furnace is increased. So we also see it in the Middle East that the local scrap prices increase because the consumption is increased. So as a replacement of the iron ore, some of the percentage is being used in the blast furnace, that's sure.
Well, not only that, actually, Chinese mills are very versatile. They look at the pricing of iron ore and they look at the pricing of scrap. And if the scrap is favorable, they will produce the steel more using scrap than the iron ore. And they have the ability to do that. I think that's the only country in the world that can go back and forth.
Okay, I see. My question was more the Middle Eastern steel mills, EAF steel mills, which use DRI. Some people are saying they have increased their scrap procurement. The amount of scrap which they buy, because DRI is harder to produce because of the iron ore pellet shortage.
So I'm sorry, let me understand. You're saying does the electric arc furnaces will have more production because of the reduction in the blast furnaces? Is that what you're asking?
No, the EAF mills in the Middle East are sourcing more scrap over DRI.
Keep in mind that I think we just mentioned that even at $90 or $100, the advantage that the blast furnaces have still is there comparing to the electric arc furnace. So for that reason, really the balance have not shifted yet. It's just that the cost of the blast furnace production went up a little bit, but they're still much cheaper than the scrap producers. I mean, electric arc furnace producers.
Okay, thank you. And my second question was on Canada. We saw the Canadian International Trade Tribunal suggest last week to the government not to apply safeguard measures any longer on rebar imports. If this were to happen, if the Canadian market were to reopen to Turkey, how much of a boost would this be, do you think, for Turkish rebar suppliers?
Well, I'm assuming what you're asking is in Canada, they are talking about safeguard measures and they may exclude Turkey. Is that what you're saying, sir?
No, I'm saying the Canadians have applied safeguards of 25% since last October on certain imports, including rebar, if I'm not mistaken. And now they're thinking about not applying that safeguard duty on rebar any longer. So the Turkish suppliers could potentially again supply the Canadian market with rebar.
From
Which would
what
be
I
some good news.
understand, the safeguard, number one, it's not really certain yet.
Yeah.
And there's a rumor that the rebar will be excluded from the safeguards coming up in the next 3-4 weeks, maybe 5. But it's not really certain yet, and I don't think it's possible, but it's not certain yet. It's one of the recommendations that everybody's talking about, but it's not certain yet.
Okay, thank you.
Any other questions? Okay, we're going to move to Europe. And really, you can read the first question. It's a long one for you.
Yeah, it's a long question. Some European importers prefer to keep imported steel uncleared, though customs, until new quotas become available. How do you evaluate the risk of keeping the material uncleared for a long time? First of all, from the market perspective, and secondly, taking into consideration the possibility that everybody starts clearing their material at the same time through different customs countries within the European Union. Well, for all those who are not from Europe and who are wondering what's going on over here, Brussels has implemented, beginning of the year, a real smart safeguard measurement, if I may say so. So it's, as usual, more complicated is better. So they have put in place a so-called country quota for specific products for those countries who were big importers into the European community for that particular product. And then they have identified all others who got a quota. Under all others, you have a certain amount of, or a certain volume, which, however, can only be used divided by 4 and then for each quarter, and in the last quarter, those residuals which are being remained can be used from those who have a country quota. If you say now, I haven't understood that, believe me, I needed a couple of days to understand that, and luckily our competitors as well. So it's a real difficult situation because talking now about rebars to make it more practical, Turkey has got a country quota. The country quota is 300,000 tons. So what happened? Everybody was believing that this is going to start beginning of the year and will end by end of the year. No, Brussels decided to start that on the 2nd of February and to end it by the 30th of June. Meaning that the quota which was given was again divided by 12, multiplied by 5 and a little bit, so to have this quota for June. So the whole European community was shocked, the importers were shocked, because the multiple of that quota was on its way. And so what happened? Yeah, the material arrived at the ports. Not everybody was brave enough to clear it, God thanks, because then it would have been a battlefield, 25% duty for everything over and above that quota. So they had to leave the material in the ports for a certain period of time. And then we were made aware that the fourth quarter is actually the quarter from March to June, in which the residual from all other countries can be used by, for example, Turkey. And then the second ratio was customs cleared in April. So the whole quota is gone. We are at zero now. The residual from all other countries is used. The Turkish quota is used, and I think even the one from Russia is used. Bosnia-Herzegovina, I think not a kilogram has been used. Moldova, also almost nothing. And yeah, so the point is we will have now the situation that you have 300,000 tons quota from 1st of July for a country like Turkey into the whole European community, and as a base, Brussels choose the periods of investigation of 2015, 16, and 17, which were the worst and least imports or exports from Turkey into Europe, because at that time Turkey had such a boom in the domestic market that they and America as well, so they were not really looking into Europe. So the quota is relatively small, and you know how many mills we have in Turkey selling rebars into Europe. And so with 300,000 tons, you can say 1st of July the quota will be opened, and maybe on the 10th it will be used. And exactly then you have this, this person who came with this question is saying here, yeah, the risk is there. There is a huge risk, because now everyone may try and will try to bring in his cargo on the 1st of July to customs clear it. But the material has to be there physically. Yeah. If you are delayed with your vessel because of bad weather or an engine failure, you may have your material there, quota is gone, and then what to do?
But you said something yesterday. You said that you can bring the cargo and you have 90 days to clear to customs. So everybody's going to bring ahead of time and wait for that to file. It's quite different than the US, because in the US, when you bring the material in, you really have to clear customs before you can take it out. Exception is if you take it to the free trade zone, which is an expensive thing because you have to use bonded trucks, you have to have a bonded warehouse, so it's a very expensive thing. So really, majority that comes in has to be cleared immediately. But in Europe, you're saying you have 90 days to clear, so it's a nice period.
Yeah, but 90 days is a nice period, but if you know that the quota is, let's say, exhausted by August, and then the next quota will only be opened
next year.
In March or 1st of April the following year, you are talking about 8 months.
Yeah, it's peanuts.
So I mean, storage fees and the threat of customs clearance, you hardly find bounded warehouses to stock rebars. They will not allow you to come in with a cargo, and no guarantee that you can customs clear it promptly, because they live from trading and from moving the cargo, but not from keeping it there for forever. So yeah, it is a huge risk. We are of the opinion that this quota will be consumed pretty fast, and yeah, then you have all other countries, and there are not many who have the ability with all the homologations and so on. And what we discussed already this morning, yeah, the trade flow is changing, yeah, and it's changed not by market requirements, but it's changing by political interference.
Sure. Yeah.
So I can only say, yeah, it is a big risk. You have to be very, very brave to do that, and you have to really know the figures, because it's 15 vessels of 20,000 tons for the whole of Europe.
So, Joe, I guess the next question is almost similar.
Yeah.
If you want to add any sentences for that.
Yeah. So the question is, according to the Trade Defense Director of European Commission, EU imports have fully used quotas for rebars and wire rods and have to pay 25% tariff on the surplus volumes until the quota resets. And some importers are complaining they've allegedly no longer able to source the products. Now that there will be a review to assess such safeguard measures, what adjustment would you expect, if any? Yeah, it is correct that the quotas are completely used at a very early stage, so everybody is waiting now for July, and then depends on what I just explained. Everybody may lay back again and wait for March next year, and I haven't heard really that someone is complaining already against a lack of import or against lack of rebars.
So there's no shortage.
For rebars, there is definitely no shortage. And speaking to European producers, they even say, well, we totally overestimated the demand, and we underestimated the flexibility and production utilization which was made by European mills, that all these volumes can be easily absorbed. So on wire rod, the situation is definitely different, because we have people in Europe who are depending on imported wire rod because they are not getting support from European suppliers, because they are integrated mills with production of wire rod and downstream industry, so they will not support their competitors. So those who are depending on imports, they are in a very bad situation, and certainly they will have used their muscles in Brussels, but honestly it's at such an early stage. I think right now in Brussels you won't get any open ear and any open mind to rediscuss that. And I mean, we have heard now that the automotive industry, they went to Brussels because they are lacking some specific products already. Okay, the automotive industry might have bigger lobbyists and more expensive lawyers to fight the case, and they may get support. But I think on rebars, simply the lobby of a rebar cut and bend shop is not at all existing in Brussels.
I guess you may have a similar situation where we had in the US. They give special exemptions to certain products, certain mills, which is a crazy thing to do, but that's what we are doing. So it's since we are the ones who are giving a good example to the rest of the world, you may adopt the same thing.
Yeah.
And for the wire rod, you almost have to, certain types of wire rod.
I mean, what is interesting is that the whole thing from Brussels was explained by the safeguard in America, or Section 232. So, and it's clearly stated there, as soon as Section 232 is being taken off, that they also will reconsider and reevaluate the safeguard measurements. So that means it's a pure reaction to what has happened in America. But honestly, America has made it already a year ago, and in that whole phase, we haven't seen that really that there was a massive change of trade flow from America over to Europe.
Yeah. Any other comments, gentlemen? Or ladies? Please.
Speaking of the risk, obviously we're an importer of rebar who also...
A little louder, I cannot hear you.
We're also importers of rebar who struggled with customs clearing material for 2nd of February, 1st of April. And we are a big importer usually from Turkey of rebar into the UK and Ireland. And our stance at the moment is that we can't take the risk of buying Turkish material because we also feel that the quota will be gone within a few days of it opening in July. But it seems crazy to me that there can't be some sort of recording of export sales from Turkey of rebar and wire rod so that people like us and you can feel assured that when we're buying it's going to be within a quota. But there doesn't seem to be any body, any association that can or is willing to take it on. Do you know of any, or have you had any idea how to avoid the risk that we all face?
Maybe you can
Brexit isn't the answer, unfortunately.
Excuse me, but the sound is so bad, I almost haven't heard anything. Is there anything you can do? Here you hardly get anything from the questions.
No, I can shout a bit louder. Is that better?
Yeah, not really, but let's give it another try.
Okay, so we are an importer of rebar from Turkey generally, but having struggled with customs clearance on the 1st of February and 1st of April,
yeah,
we don't feel that we can take the risk to buy Turkish rebar anymore. And yet last year we imported a huge amount. And what I find a bit surprising is that there's no trade body or association that will take on the responsibility of counting export sales to Europe in order that we can continue to trade. Do you know of any bodies that would take on this responsibility?
Actually, you're absolutely right, because if you think about it, Turkey is part of the common market. So there should be no special restrictions to Turkey other than US started already to making a Turkey an exemption and put a 50% tax on it. So everybody else is piling up on the country. So I guess Europe will do the same. And really, Turks are not defending their case as well. And I think that they should really go and talk about it and better defend their cases. I see a lot of Turks here, and I'm originally a Turk as well myself, but they all are easy to accept what's really offered to them. I think it's not fair because the 300,000 tons is a joke, and Turkey can, easily export more. But there are. In fact, next week, I understand there will be a meeting between the two sides, and they should protest, and they have a right to.
But did I get your question correct, that you are complaining that there is no authority who is counting the imported material?
No, I think that by the time it's imported, it's too late for all of us.
It's too late, yeah.
So something should be done before we buy anything. Somebody should be counting what has been sold for export to the EU.
Absolutely. I fully agree with you, and that is a big headache for all of us, for every importer. And if you are importing, certainly that is our major concern, and that is also what we try to address to the Turkish steel industry and to the Turkish Steel Federation, that we said, look guys, you leave all the trouble with the importer. Yeah, so there must be an instrument that at least...
And there has to be time, because I would imagine probably a lot of sales have already been made in time for the 1st of July. But but this is going to be with us for 2 years, apparently. So although it may be too late for anybody to take on this task for July, we've still got another 2 years when we don't know how to trade with Turkey with rebar and wire rod.
I mean, you guys are the traders, and really you have a voice in your own countries, and I think you should raise your voice and you should talk about it. You know, if you don't, who else is going to talk for you? I mean, the consumer doesn't have a voice. You have the voice, and actually, I'm so glad you bring it up. This is one of the places that you can bring it up, so it's to be discussed and come up with a recommendation as the IREPAS group, what you prefer to do, or what you need, and what you think that should be done in the country.
Yeah, it was one of the items in the safeguard that Brussels was considering a kind of a surveillance document or import license procedure, yeah, so that you can apply for an import license, then it gets be stamped, okay, it's still within the quota, and then you have a license and you can bring it in free. But Brussels said, no, we don't want that, because that would eventually create a mismanagement of the volumes, because big importers may buy the entire quota at a time. They have the money, they have the funds, they can handle it, and the smaller ones will suffer. Yeah, so that was their argument not to use that. But I fully agree with you. They put all the burdens on the importers, yeah, and they left everything very nice for the domestic steel industry. So as more uncertainty is existing, as more difficult it becomes for everyone to import and for everyone to take a risk. Yeah? So we had these import license systems years ago when we had a similar situation in Germany or in Europe, but that was completely vanished, and we had the free trade. But now we are back in ancient times, it looks, and yeah, it's being made extremely difficult. And I fully agree with you. I can only underwrite the lobby of the importers, of the downstream industry, which is so fragmented that they don't have a union, has not been considered in a proportional way. But the interest of the industry, who is, of course, stronger and more organized and doing this lobbying for decades, they know their ways and doors in Brussels.
Do you have a steel importers association like we have in the US?
No.
Maybe you should have one.
I mean, maybe if the Turkish mills found they weren't selling any rebar because everyone was too nervous, they may actually do something about it. But at the moment, we've spoken to a number of mills with a suggestion, but everyone's kind of shrugging their shoulders and continuing to sell, and they will sell beyond the quota. Because they need to, but maybe if they didn't make the sales, that would be the only time that they may consider assisting the importers.
I'm not sure.
Difficult. I mean, Turkey is also fragmented. There are lots of interest, and there are a lot of different interests. So. On the other side, also we have to see it from the point of eventually, legal points and so on and so forth. So it's not easy to structure such an instrument to give more comfort to others or to the importers. So yeah, it will be a very risky business for sure, and honestly, I do not really have an idea how to overcome that and how to make it more safe. It will be risk-taking, that's for sure.
By the way, the next set of questions is also almost the same subject, although it's about Turkey. It says EU's other countries' quota opened up for all countries for April-June period, considering that Turkey used up its rebar and wire rod quota in very short time. Is it okay to think that Turkish mills will benefit from these new quotas? I guess not.
Well, they have benefited most because they were the only ones who really brought in. The percentage of all other countries was relatively small, so the remainder, I would say to 99.9% went to Turkish products. So they really got the whole thing. But again, it's a little bit irrelevant because first of all, they have their 300,000 tons. And then they have to wait till March next year before they can do something again. But then you have to watch, okay, what is the residual left from all other countries? What is eventually on its way? And yeah, then the race starts again. Who is there on the 1st of April? And
Tough.
yeah, very tough.
Okay. Again, the next question is about Turkey. It says, since Turkish long steel products have few chances to sell in the USA and Europe due to protectionist measures, which alternative markets are they targeting now? Well, I'm going to say the Turks are very resourceful people. They'll definitely find a way. I'm sure it's going to be tougher than before because US obviously was one of the biggest markets for them, selling over 1 million tons. But, you know, they're constantly looking. And one little secret, they're following Elon Musk, and they're waiting to see when he's going to go to Mars. As soon as Mars way is open, Turks have the first ship gone there. Other than that, I don't know. Do you have any comments?
Yeah, it's a very difficult.
Any other markets?
Turkey, I mean, as you know, one of the major markets for Turkey was, like US, was Middle East. Like UAE, Turkey was selling regularly rebar until 2017, 100,000 ton minimum per month. But the last cargo entry from Turkey to UAE was 2017 May. And afterwards, there was no shipment entered from Turkey to UAE. And also, Saudi Arabia is one of the regular market that we used to sell. In 2016, the quantity that we sold about 1 million ton, but in 2018, almost zero. So what we see is the Turkish producers, rather than selling rebar, they prefer to sell pellets. So recently, since last 5 to 6 months, there are some billet sales from Turkey to Middle East to North Africa. And these 2 months in 2019, like the January, February figures, is clearly showing that the semi-product export is increased in Turkey by 267% to the export of Turkey. The semi-product, 267%. So Turkey is also having the chance to replace their production or change their production, and rather than selling rebar, so they may sell billets. So generally, from Southeast Asia, we don't see the demand to Turkey yet, and so most of the Turkish producers are waiting for US to open up again. Luckily.
Okay. The next questions are really scattered. One of them is the LME. The LME scrap futures traded like 4 million metric tons in 2018. How does the panel see the growth in volume and increasing use of the futures contracts by the steel industry? We're talking about scrap futures and scrap LME. Do you have any comments?
Honestly, LME, what we discussed yesterday is that the 4 million ton sounds a lot, but is nothing compared to what we discussed and what is happening in China. You mentioned a terrific number yesterday. What is a trade? That the 4 million tons is a trade per day in China.
Exactly. Here the LME scrap futures traded 4 million ton in a year. But we know that in China, only rebar 4 million ton traded in a day. So compared to scales, I mean, of course, the country-wise also we cannot compare, but compared to future of the China, there's a huge potential differences. And the usage.
And as we discussed yesterday on the scrap, there's a price difference from the European scrap to American scrap going into Turkey. So really, I don't know how the system really works. It's you know, you can talk some certain base, but you gotta have to base it on what the European scrap or American scrap. I don't know how that works, but I know that they tried it on the rebar, it didn't work. And really even the hot roll coil and the billets and billets could have been, but again, these are all, you know, when the quality gets involved, it becomes tougher to make it happen. But eventually it will happen, but I guess he hasn't done his job yet, if that's that small compared to. Yes, sir.
Pascal Dick from Platts. Yeah, on the contract, I was wondering, you know, in the past, obviously, you always had a certain, you know, sort of hedging effect from the Turkish mills. Let's say if scrap goes up $20, you also had you know, they had the opportunity to go up $20 in let's say the rebar as well. So, you know, you could sort of hedge your pricing risk there a bit better. But now that that margin is basically under pressure, and you know, let's say scrap goes up $10 for whatever reason on the supply tightness, going up $10 on rebar will be more difficult, I guess, if you want to, you know, still sell into the export markets competitively. So my question is, do you think now would be a good time to sort of start looking at those futures, or have you you know, in the industry itself, have you felt like mills, Turkish mills, and market participants are more interested in using futures now that there's such a high volatility and that you really have the pricing risk on the producer side, or is that just something that, you know, lends itself to it theoretically, but you haven't really seen anyone practically interested? Just be interested in what you have heard in the industry.
Well, I cannot really speak for the Turkish steel producers because we are here more from the trader side, but from what I understood talking to Turkish steel mills is that, well, first of all, an LME also means costs. Yeah? So you don't hedge anything without having also a cost factor. And what we always experienced over the last 20 years is that a major point in trading with Turkey in particular is to have this volatility in the prices, to have the volatility in the markets, and to have a certain speculation. So I get more the opinion that the Turks and also others rather prefer to speculate on the product, on the real product, and then on the scrap as well, rather than to hedge it. We have made various trials for cut and benders, for example, where people also came across that, look, we have a project lasting 2 years, 3 years. I cannot buy 50,000 tons at once, but I want to hedge this product. So on rebars, it's even more complicated because you have this homologation issues, you have this and this, and now, let's see, now you have even the origin problem, so safeguard issues, so you don't even know where to get it from. And but nevertheless, even when all was open and all was freely tradable, it turned out that the customer in the end of the day said, well, I should pay $15 or $20 for that service. Oh, that's too much. Then I'd rather speculate. So I think it's a human being problem and matter. If you feel comfortable to have all insurances, life insurance or car insurance for your roof and for your tires and for everything, you do that. If you think, well, life is risk, so let's love it and do it, then you don't do it. But of course, the trading itself is a risk as well. But I think the Turks, in particular, were always able to manage it pretty properly.
If you think from the mills or producers' point of view, when the price of scrap goes up $10, they push their prices up $10. When the scrap goes $10 down, they lower the prices $10, or maybe with, in a little bit later. But at the end of the day, they don't need to really worry about it, because they can transform that price difference into their product almost immediately. As far as the let's say the consumers, rightfully said, on the bigger projects, especially for the U.S., we sell to the fabricators, and they do get into projects, that continue for a year at a time. That's where the traders come in, and they come to us, and we kind of give them anything we bring. We will come in, 4 or 5 months anyway. So here's their hedging already 5 months with the pricing today. And going forward, they usually don't do that either. I noticed that majority of the projects, they're only guaranteeing 6 months, so it's not a whole lot of risk that they're taking. And last thing, 232 came, and all the bets were out. You could really guarantee anything you want. Who can stand behind a 25% tax or even 50% tax? So really, it's a tough thing. You can hedge it as much as you want. When 50% tax comes in and it's effective next week, you have no chance. Anyway, the last question is what is your forecast and outlook about the construction market demand-supply balances in each major region of the world for the second quarter of 2019? I should really say for the second half of 2019, second quarter. We don't have much time left anyway. And really, there's a list of the regions. Number one was the Latin America or the South America. We discussed this yesterday, and the prospects doesn't look very good for South America. Argentina, as you had seen this morning, is in trouble because of the financial situation and their currency problems. Brazil has, there is a lot of investigations on the mills and the producers, and so they're going through their internal investigations. So nothing new is coming up there. So I was told that the only country that has a chance is Peru, and which has a growth rate of 4 to 5% GDP. So when you look at the South America, the market doesn't look very good. Central America is actually also not so good. And if I can talk about the U.S., the market is very good actually in the U.S., but we can't import. So, I mean, it's very good for the domestic mills. Domestic mills are enjoying, 25% margins. They're doing really well. So economy is doing well. They're doing really well. We have a lot of infrastructure projects going on. We have the Mexican wall that we want to build, which is going to consume close to 6 to 7 million tons of steel, which probably is going to push the pricing of scrap in the U.S. even higher. So life in the U.S. is good for the domestic producers, and we're just watching. Maybe you can discuss on Europe in general.
Yeah, on Europe, we have also heard this morning from Seltzer some statistics. So don't want to put numbers again, but overall, Germany, Netherlands, and Belgium are in a pretty good situation. The demand is there. It's strong. It's coming from the public sector, but also from the private sector. The amount of new projects is on a very high level, much higher than years before. So the outlook for 2019 and 2020 is definitely positive. However, we see big uncertainties, of course, in the UK. Nobody can really foresee what's going to happen. Will there be a Brexit? Will there no Brexit? The impact, I think we all here can talk hours and hours and give our opinions, but I think since nobody knows what's really going to happen, it's just a fairy tale. In Italy, unfortunately, the situation is getting worse. The demand is bad, the production is way too much for the consumption. I think there's just 1.5 million tons consumption in Italy. Luckily, Spain got a good development from almost 6 million tons. They fell down in 2008 to 600,000 tons. And then they slowly came back to 1.2 million tons. So, but let's not forget, Spain has a production built up which is almost 4 million tons. So if the demand is going up, don't worry, they can adapt to the production in line with the demand. So that's maybe one of the reasons why we haven't seen that price increases yet, despite of the safeguard measurements and now the disappearance of Turkey from the importer side. And Eastern Europe is, I would say, with a little upwards trend. It's active, but of course those countries are not able to correct what eventually a fall down in Britain would bring. So I think on the next IREPAS we are all smarter and we will better know how Europe is going to be. And
with the Brexit.
With the Brexit, yeah. And then of course also with the real impact of the demand side, because then all of a sudden Britain becomes maybe an export or an importer to Europe under all others quota. So that's also very interesting to see.
Yeah. We also have, we're running out of time,
yeah.
But we also have the Southeast Asia, which you kind of mentioned before. I guess we can talk about Africa, if you can talk about a little bit Africa and Middle East.
Okay. First of all, let me start with Turkey. Turkey, last year, the production was about 37 million ton, 37,500,000 ton. And when we look at these first 2 months, like January, February, compared to 2018, so in 2019, the production cut in Turkey was 16%. So this is for the crude steel production, 16% cut down. And when we look at the rebar, the end product production also came down by 23% compared to 2018. And the consumption compared to the first 2 months, so also came down 38% in local market. So Middle East, traditionally the Middle East was a net importer country, mainly from Turkey. But since last 2 years, we see that the Middle East start to be net exporter for the long product, especially to Southeast Asia. And one of the main countries that has been exporting is Qatar still, Qatar, Saudi Arabia, and the UAE. And so, which is also clearly shows us that the demand in local market is not sufficient for the producers, and plus they have excess quantity to export. And since the local production started to come up, Turkey lost the chance to export those countries, plus start a competition in the common traditional international markets. And For Africa, Turkey has been selling billets, long product, rebar, and China has been selling mainly for the flat product, like hot roll coils, hot roll plates. But and also the section has been going from Turkey, but still is not in the level that what is desired.
Okay. Any other questions, comments for us, for you guys want to discuss? Oh, go ahead, sir.
Iran. Yeah. I mean, the thing is, when we go to Middle East, when we start negotiating with the customers, that we used to always hear the Iranian prices and such an attractive price from Iran. But since last almost 6 months, there is no Iranian offer to Middle East because no one wants to deal with, because there is the sanction risk from US. So there was some trick solution for that. Some of the trader import that material from Iran, discharge it in another country, change the certificate version and to export it. But still though, so there is no much demand for Iran material. Only we've been seeing some small truck shipments from Iran to Turkey for rebar, although there is a 10% import tax, but still is the price is acceptable by some of the construction company.
Because of the sanctions, it's basically as that. Otherwise, I mean, you can't do it with a dollar trade. So then it's very difficult. There's other things that he just mentioned, but that is scarce and it's troublesome and it's not easy to make it. So, yes, you know, they are resourceful, they're going to do that, but it's not really something that we can just talk about because we don't know what happens in the black market. All right, ladies and gentlemen, thank you very much for your attendance and your participation. I hope we answered some of your questions. I guess we'll see you tomorrow.
Murat.